2 on the dot. Good morning, folks. It's a very good morning. We actually had FOMC yesterday, and it's a good morning in London, in New York. No, it's in London. It's London session. Now we're going to start just as it is. So we had more. I'm going to come back and explain. I just want to pass to the economic calendar. This minute we have this claimant count, these two. In the New York we have monetary policy, so in the New York we'll have more volatility. And currently in the London session we have that claimant count which has just been released now. So what you're expecting is more volatility. Let's check the move yesterday. So let's just do it from the 4-hour. Yesterday, as you can see, I was telling you this SMT. This was an SMT I was telling you, comparing it with the dollar index. So what I was telling you is this SMT. You see this? These are sell side liquidity, and I was actually mentioning them in the live streams. You see this, and these was sell side liquidity that I was mentioning yesterday. Another thing is remember this SMT I was telling you, these are smart money, are inside this move. You see this lower low, while the DXY is making some higher highs. Yeah, a higher high, but these are higher low. Same to this one, a higher low. So during the SMT, the FOMC price decline, but they were positioning themselves up here. So that was the move that caused this go to this sell side liquidity. Actually, I was anticipating this sell side liquidity to be raided. As I mark this sell side liquidity, this one, and I think this one, probably this one and this one. So it's currently at New York. So let's see what is in the chart. You see the weekly price has swept sell side liquidity, so the target has been reached. See this? Let's see if we can take out, but this so far. So that's what I'm anticipating. Price has swept that sell side liquidity in the weekly time frame. You see this sell side liquidity in the weekly time frame. Price has swept that sell side liquidity in the weekly time frame. This, and you've seen this decline. So next week we might want to see the tomorrow or maybe next week we might want to see price attacking this sell side liquidity. See here, price came and touched. If it disrespected it, we are continuing lower. Yes, it disrespected it. That meaning we're going to look for something lower. Let's hurry and mark the midnight open. Just trying to explain the move, the SMT. but these cells are liquid. Now let's delete everything and start afresh. That is the midnight open. I want to analyze the yesterday's move so that I can settle my mind now. So yesterday in the FOMC, you see this price was declining low. I've already explained that SMT. You see, after the FOMC release, it was here at 2. So price came into that 15-minute fair value gap. It created a fair value of the 15-minute. Then the double bottoms. So price came to that's an hourly. Price came to that fair value gap. Price came to that fair value gap, the 50-minute, then declined lower, around 50 pips. Yeah, over 60. Okay, it moved total of like 100 pips, but we got in the this liquidity was around 60 pips. So that was the move that was, but you should have positioned yourself early enough during the London or the Tuesday New York when I was telling you this Monday, Tuesday New York. Then wait for these sales liquidity to be taken out. That's actually like a swing trading model. But as for today, let's see if price will take out. I want to work with this one for today. This sell side liquidity. See this sell side liquidity. I want to work with that one. So there is the midnight open, the blue line. In the hourly, let's see if we have a you see this is a sweep. Price sweeps that buy side liquidity, then no market. Okay, there's a market structure shift, but at the time, we want to see at the time. So let's wait and see more clarity. See price has disrespected that 15-minute fair value gap. There is no liquidity sweep here, so not looking for buys. Or how price has swept this higher time frame sell side liquidity. See this. But I wanted a sweep, not price to close inside it. But this one might tell me that price is going to go to this previous day low. And also here in the 4-hour, you have a huge fair value gap here. It's a 4HR. High algo frames. Now we're expecting that sell side. You want to see price will act on this sell side liquidity, but we're gonna wait for more clarity. In the hourly, we have seen that sell side, buy side taken out. Now let's drop down to the 50 minutes. Price can consolidate this particular day, or it might move, but we'll actually wait for more confirmation. We want to look for more confirmations. I told you, fair value gap here, decline, taking out a higher time frame. Sell side. Is this the monthly? Wait, we took out that monthly low. Yeah, remember this monthly low I was telling you? Exactly. This is something that I was telling you for a long time. When we were above here, I was saying this sell side liquidity in the monthly, it's my interest. And you've seen how price actually just came to that monthly low. Previous monthly low, take it out. Now you might see some reversal or continuation to this sell side liquidity. But let's wait. That monthly low, that target has been reached. So if I was a swing trader, this sell side liquidity in the monthly has already been targeted. So in the 4-hour, prices inside that fair value gap, we want to see price declining to these or wait for more confirmations. In the few minutes, I'm going to show you the trading plan. And we're also below the midnight opening price. So anytime you're below the midnight opening price, you'll want to look for buys. Anytime you're below the midnight opening, but we'll wait for price to come to this buy side. Maybe take out a buy side liquidity, then decline lower. Now we have to wait. There's a question I had here. The reason why we had a lot of liquidity, this is the first time that Kevin Walsh, the Federal Reserve Governor, this is the first FOMC that he's sitting on, and we actually expected more liquidity because this is the first FOMC of Kevin Walsh while he is on the seat. So yeah, we might actually want to see some reduction of the interest rates later in the year. Also about the war, it can actually be that. So we are below the midnight opening price. We want to wait for more confirmation. Now that is the FOMC I've already showed you. That is what I want to show you now. But let's go back to the charts and see what's happening. I've seen it. We were actually late for the entry, but it seems it's gonna rally up. That buy side liquidity has been done. just marking something here. Yes, we are inside that fair value gap. See that? Prices come above the midnight opening. I only look for buys when we have a fair value gap in the 5 minutes. That's when I want to look for buys at these current situations, because the market are so volatile. And we've just had a news released in the last 16 minutes. So yes, we are waiting for that. Yes, we are waiting for it. But yep. I want to see more confirmation. You see, we're also inside that 15-minute fair value gap. That big fair value gap in the 15-minute. And also in the 15-minute, the supply side taken out. Or it might be a market structure shift. Let's wait and see. This is the blue line is the midnight opening price. 0 0 0 0. And to check if I would see an SMT. So the high at 0. This is an SMT, like a continuation. Let's see if this will be an SMT. Price not taking out this high. The same high at 0 0, the same high at 0 in the euro, the same high at 0 0 in the DXY. So that might be a SMT. Let's see. So we might not expect prices to go low, but we're gonna wait. But this area price actually a tricky place. It's around the midnight opening price. As you're waiting, let me take you through my trading plan that I actually wrote here. My trading plan. And also remember, we had a nice move yesterday after the FOMC. And at the same time, we are having an FOMC. We're having an FOMC in the, not FOMC, but rate announcement. It's just like an FOMC, a rate announcement here in 7 a.m. exactly at 7 a.m. London. The GBP. Also the interest rate is the same, 3.75. I'll be watching the price while I'm explaining. So this is my trading plan. Welcome to my trading plan. So don't worry, I'll be watching price also. I want to just explain about this thing that I say that I'm going to explain today, which is the trading plan, my trading plan. So yeah, they have the same rate. That's actually so they have the same rate announcement. fair value gap, and this another block. Let's measure the it's so far. That's not an A plus setup that usually wanting to buy. Price is so tricky, but let's give it like 10 minutes, then come back to it. Now what I wanted to explain is this is my trading plan, and as you can see, my trading plan actually printed. I have a hard copy of my trading plan laminated, so it's something that we're going to work with for the next 10 or 20 years plus. So my trading plan, anytime I'm going to sit in the charts, I'm actually going to determine the economic calendar impact for today. If you can check all my live stream, there is no single day I ever come to the live without having the economic calendar on board. Determine and mark the higher time frame, monthly, weekly, daily, and for PD arrays. That's something that every day I usually do. You determine and mark the higher time frame. So aligning yourself with the higher time frame bias is actually one thing that actually will escalate your profitability. Determine and mark previous week and previous day highs and lows. So that's an area where you'll want to consider marking the previous week's highs and lows. The previous weeks and previous days highs and lows, those are areas of liquidity. Those are areas that we want to see liquidity. And if you can see the price is actually doing, you see that fair value gap that I've marked it below the midnight opening price here, this fair value gap. Let's see if we'll see a reaction to this buy side liquidity that I marked here as we continue explaining the trading plan. So yeah, there. Where are we? So here, narrow focus to kills. After determining and marking the previous day and previous week and previous day highs and lows, you narrow your focus to the kill zones in the London session. Now this is before the London session starts, so you should be in the charts after knowing all these things that I've marked there. As you can see, price actually doing so in the London session. After determining all these in the London session, we determine the hourly and the 15 minutes premium and discount arrays during the London session. You'll want to drop down to the hourly and the 15-minute premium and discount arrays. After dropping down and marking the 1 hour and the 15-minute premium arrays and discount arrays, you mark the midnight open. And the important thing, mark the midnight open. So the importance of this midnight open, you want to buy below the opening price and sell above the opening price. That's a rule. We're only going to buy and sell after a liquidity sweep and a market structure shift in the 1 minute and 15-minute time frame. Actually bolded this one green because using the 5-minute market structure shift, that's an A plus setup with a fair value gap in the 5. So the fair value gap in the 5 minutes, that's an A plus setup for 3 to 1 minute time frame, coupled with the higher time frame PD arrays. Or when price rallies post 12 a.m., buy or sell the first retracement into a 15 or 5-minute order block. That's a rule. Use this one or this one. That this one is exception when we're not going to buy below. So when price rallies or decline post 12 a.m., you buy the first retracement to the first. Stop loss. There's a rule. Your trading plan should have a place where you should have a rule of a stop loss below the recent swing high or low in the 5-minute time frame. Less than 10 to 15 pips are never moved. I wanted to write around 10 pips, but I wanted to give myself a breathing space of additional 5 pips, because A plus setups usually have 4 to 7 pips stop loss. A plus setups 4 to 7 pips stop loss, because you're using the 1-minute time frame for entries, and that's precision. And if we couple it with the higher time frame, straight lead pipe to finance. First target at 30 pips or 5 a.m. You see, first target at 30 pips. So every time in the markets we're actually targeting 30 pips, or 5 a.m. or at a 4-hour PD array, premium or discount array. Another rule is protect capital, use good risk management. Another rule, 2 trades per session maximum. 2 trades per session maximum. That's actually what you'll want to work with. Time is the first factor on how price is delivered. Another student of mine told me, you come at the exact time when price actually when it's taking a liquidity sweep. The reason why I'm using time as the first factor on how price is delivered. Always follow higher time frame directional bias, higher time frame direction. So this is actually the rule of London. It's actually simple, easy. If you work with this, you can actually have a lot of money. But this is a formulated. You see this page here, it's a formulated of a 4-year experience put down in one single sheet. This one here. Kindly tell me in the comment section, how does this trading plan looks? It's actually my trading plan, and I've actually solved it. Does it look nice, or are there more adjustments that you personally see that I can adjust? Another thing, I've already finished the trading plan of the London kill zone. As long as price has not traded in a higher time frame discount or premium array, New York will always be a continuation in the higher time frame. So this is actually a rule. It happens every time. As long as price has not traded in a higher time frame discount or premium, New York will always be a continuation. That's the reason why New York is always the easiest. It's always the easiest session to trade. And another thing, I'm going to take you to the New York trading plan. I wanted to stop here in the New York and come back during the New York session, that I can give you this trading plan, but for the sake of time, I'll just give you now. In the New York kill zone, it's actually 7 to 10. Again, we check the economic calendar. Since we are having the higher time frame directional bias, in the New York, we determine the 1-hour and the 15 premium and discount array. We only buy and sell after liquidity sweep and the market structure shift in the 1 minute or 5 and market structure shift in the 1 minute and 5 minute time frame with a fair value gap in the 5, 4, 3, 2, 1 minute time frame, coupled with the higher time frame PD array. Just the same thing I've explained during the London session. Another thing is what is the meaning of last line? As long as price as long as price has not traded. As long as price has not traded. So you know, when we open the London session, like now, this is the first session of the trading, like the trading day. So if London has traded in a premium array or discount array in the high time frame, when we are closing the London session, not the London close, when the 2 to 5 a.m. is coming to an end, that is the time that you will want to use. You'll want to anticipate. If price has not traded in a premium or discount, New York will be a continuation. As long as price, it means that we expect price to trade in a higher time frame during the London session. But as long as it hasn't traded in that time frame, price is actually going to continue. If it has not traded in that premium or discount array, price is going to continue. So this is actually one thing I said that it's something that I've seen, and I see it here, as it in its notes. So hope you have understood. If you have not understood, kindly tell me, then we explain more and more again. So another thing, yeah, as long as price has not traded, so price should trade in that session. Hope you have understood. Now in the liquidity, check the economic calendar, determine 1 hour, 15-minute premium or discount array, buy or sell after liquidity sweep and market structure shift in the 1 minute and 5-minute time frame with a fair value gap in the 5, 4, 3 to 1 minute time frame coupled with the hard time frame. We only buy below the opening price and sell above the opening price. Now another thing that has changed in the New York session, in the London session, we use the minute opening price as the 12 a.m. opening price. That is the opening price at 12, using it in the London. In the New York, we use also that at 12. In the London session, we use 12 a.m. as the minute opening price. Same to New York, but in the New York session, since you're also using the 12, we should consider the 8:30 a.m. as the opening price also. So you'll want to sit through the session, the 1 hour 30 minutes from 7, wait for 8:30. If you are going to buy below and sell above. Stop loss be the reason swing low or high in the 5 minutes, less than 10 to 15 pips and moved. Stop loss first target at 30 pips or 12. Remember at London we were saying at 5 a.m. so it's 2 to 5, this is 7 to 10, but at 12 this is the 12 p.m. this is the London close, or 4-hour PDR. Their target 2 trade per session max. Use good risk management. I thought that line was about if price did not reach a PDR during London, then it would continue and try to reach there. Yes, that's actually what I'm explaining. Yes, that is what I'm explaining. You see this, as long as price are not traded in a higher time frame period, as long as price has not traded in a higher time frame, discount of premium area, we should have added in the London session, but it's just automatic. We are in the London session. New York will always be a continuation in the higher time frame. Yeah, New York will always go and take that high time frame PDRA if it has not been taken out in the London session, but specifically the 4-hour, you'll want to consider it. These are notes that I actually wanted to remind myself. It is not about the setup or the time frame. It is about your unique alignment with the setup and the time frame that meets the happy medium. So the markets will always feed us, and we will actually want to align with the markets. Entries should be from internal range liquidity and exit at external range liquidity. When you work with this one, this blue line that I've wrote here, this one, you'll actually have more pips, more than 30 pips in your repertoire, like going there, taking out even full range, like 60, 50, 100 pips. Yeah, It is crucial to understand that efficiency in trading comes by way of process-oriented thinking, not by way of reactionary or impulsive thinking. Self-explanatory, that's actually what you'll want to work with. Premium to discount, discount to premium is the game. This is actually my trading plan. Tell me in the comment section how is it, and if you think I should do some little changes, it will be helpful for me. Yeah, seeing how price actually doing marked that fair value gap. What's our trading plan? What's our trading plan? It's saying in the London session, buy below the opening price, sell above opening price. This here to this here, but let's wait for more confirmation. Checking the 15-minute, inside that fair value gap. The fair value gap price took it up. Let's see if we'll have a market structure shift here with a fair value gap. This fair value gap I marked below the opening price, buying. Price can actually be coming and touching this 5-minute order block, then continue to rally up to this buy side liquidity. But you've seen here when the price was here, I told you mark that one. Yeah, and we are also below the midnight opening price. Then to us here below we are buying below the midnight opening price. So here, let's see if it disrespects us, if it disrespects it and take out these sales and liquidity, that will actually be a market structure shift, because it has taken out a buy side liquidity here. Oh, nice. This is an hourly buy side liquidity taken here. Price come inside that for fair value gap. It has taken that buy side liquidity in the hourly time frame. You see this stop run. So price might fade that one and come to this sell side liquidity. Let's see, it will have more confirmation. It will give us more confirmation. Uh, 5 minutes. I want to see a market structure in the 5 minutes. Checking the 1 minute, we have a market structure shift here. But I'll want to concentrate with this one. But you see this one can be a good one. But let's watch it. No, it was coming to this. No, it's not a market structure shift. It was coming to this fair value gap, and this is the midnight opening price. So giving us another entry. You see that fair value gap below the midnight opening price. Boom. But in this area it's a lot of tricky, because price has taken out a buy side liquidity. I thought that the line was about, oh yeah, I realized that. Yeah, it's good. Yeah, I think the trading plan is actually optimum, and I think it will serve me for the next 10 years in my trading career. Let's see what price will actually do in this area. It has come below the midnight opening price again, giving us another entry buy. So let's see if it will continue. and it is also inside that order block. There is a tricky place. This is a swing high in the hourly. You see this, a swing high in the hourly. If price takes out this low, it will be a market structure shift. If price takes out this low, it will be a market structure shift, and you'll actually probably want to continue lower to this sell side liquidity. But let's wait for more intel. So the next liquidity, if we see a market structure shift here, if price does a market structure shift here, this particular area, if we see a market structure shift here, the next liquidity will be obviously this one. But let's see how price is reacting to this order block here. Let me mark it. You see that's an order block. So you're actually in a tricky place. At the same time, this is another block. At the same time, please have swept out this buy side liquidity. So the only confirmation going lower is this. Taking out this, doing a market structure shift, then we see a sell side liquidity to this area. But let's wait for confirmations how price will react. Or it will respect that 5-minute order block. See that this order block here, and price come to that area. So as for the moment, we are bullish and wanting to see this buy side liquidity taken out, this buy side to be our next target. But if price doesn't do that, we are waiting for a market structure shift. So yep, order block. As for the moment, we are still bullish. The only thing that will make us to be bearish is when and only I see a market structure shift. If I see a market structure shift to this low, that's when I'm going to know that we are going to sell short. But as for the moment, let's target this buy side liquidity. Order block. So let's wait, and it's waiting for a market structure shift. If we are wrong, market structure shift here. Let's see what the next color will do. But we've seen that decline lower here. Let's be patient. So there's a swing low has been created here. You see this is a swing low has been created. So we'll want to see If price will come disrespect that swing low, this area here, this swing low here, if price comes and disrespects it, the sell side, let's make market a sell side liquidity. If price comes, take out, yeah, nice. I'm expecting to see that. If we see a decline to this sell side liquidity, that's a market structure shift, an obvious market structure shift. And you'll want to decline lower. Will there different liquidity levels for different time frame, like or at least internal liquidity will vanish as we move? They'll not vanish, they're the same. You see, when you start transposing these time frames, when you start, you see how I told you start from the higher time frame. Starting from the higher time frame will actually give you the best and the I'm not understood your question, but if you transpose them to the lower time frame, no, they will not be different level liquidity levels. They will be the same. There will be no liquidity level. There will be no different liquidity. They are just the same. You just transpose them from the higher time frame to the lower time frame. I don't think that there is like different. I think they're the same. Yeah, not I think they are the same. So starting from the hourly, you see, these are dangerous place to buy because these are inside a fair value gap in the hourly. So yeah, it's a fair value gap, and also price is taking out that buy side liquidity. See that? Yeah, I told you I want to see a market structure shift here. Actually, what is going to happen? It's happening. I want to see a market structure shift in the 5 minute with a fair value gap. If it does a market structure shift to the lower, actually targeting those sell side liquidity, but we are waiting. So these things, they don't, you just transpose them. I told you start from the higher time frame going down to the lower time frame. So what I mean is, if you start from the higher time frame, let's say the weekly, analyzing it from the weekly, daily, 4 hour, all those levels is transposed to the lower time frame. If you try to transpose them, they will be transposed. So you see here, this is actually disrespecting that, but this is not an entry. Buying here, I want to see more lower prices to this sell side liquidity. This is actually my target. This, after I'm successfully seeing a market structure shift here in the 5 minute. See that? Yeah, let me see a sell side liquidity taken out. Validation, we are not going up because this order block has been it's going to be disrespected. I am anticipating, so we want to see price going rapidly lower to that. Taking out that sell side liquidity with a fair value gap, boom, we enter a sell. But let's wait. See this consolidation. Checking the euro, still consolidating, but they were just rallying up higher. XY, I want to see going lower, but let's wait. For what this price action will do for S. Now you're actually declining lower. Yep, market structure shift in the 5 minute, waiting for it. You see it? Market structure shift in this 5 minute. It's going to happen. Let's remove this one. If you take out that market structure shift, yeah, nice market structure shift in the 5 minute. Done. It has done it. Now we are going to go lower. Now let's wait for a fair value gap in these lower time frames. Market structure shift has already been done in this time frame. Yeah, I've seen that market structure shift. Now we are going to that's a confirmation of going lower. Market structure now a fair value gap. You see that fair value gap? Nice. Now let's wait for price to decline. That's done a market structure shift. Okay, that's the midnight open. Selling here, it's a good area because it has done a market structure shift, and we're going to continue lower. Market structure shift, fair value gap. Yeah. Anything that happens. Now going lower, it's the expected move. Now decline, I've told you, market structure shift has happened. Now we are going to go lower, decline lower, because these are stop run in the hourly. Told you according to our analysis. Let me mark the midnight opening price. I deleted it. See buy market structure in 5 minutes. It's going to come here again lower. This sell side liquidity is my area. What's the best entry point? So when price comes to that fair value gap, then decline lower to the sell side liquidity here. Let me remove that, and that was a market structure shift that happened. This one here. So sell side liquidity is this one. And that one. Should we put that short sign there? Let's put it there. Stop loss there. See these are the sure bet scalp, but my target is that one. My stop loss is here. Remember, we have two chances in our trading day. If we hit those two chances and got out, we're actually getting out of the trade. We're actually remaining with only one chance. Yeah, let's watch it. I said take something at 5. I'm going to, okay, look at here where I'm extending that line to 5. Yeah, there. So let's see what this price will do. Sell liquidity, sell liquidity. This is my ultimate target. Those in and out entities here to here, the sure bet ones. From here to here. Yes, it did not retrace to a 1 minute fair value gap. See there, it's inside that 15-minute fair value gap. Currently, it's inside this 15-minute fair value gap and it has closed inside it. That's a sign that we're going to this spot. You're actually right. It did not come to this fair value gap, so it's actually an invalidation that we are not going to take the trade. But What is this? Fair value gap in the 5 minute. It has done what? Check the 5 minute. Check the 5 minute. It's a fair value gap in the 5 minute. That's not an entry that you really want to take. Did you see that 5 minute fair value gap being retraced into? You probably did. So that's great. That's great. You'll want to put a stop loss here at this specific high. Wow, I really need money. Yeah, that's actually great. So here to here, that's a good place to enter and exit. Here to here, those are plus setup. Yeah, today and tomorrow is the best trading days. Today and tomorrow. I want to see this fair value gap being, this order block being disrespected. Yeah, that's great. That's cool. That's cool. Let's check the Euro USD. There is no end setup. Yeah, actually, yeah, that's great. That's a great idea. Let's check also the Euro New Zealand. If I had that account of yours, we would open up bigger lots also here and here. But let's wait. Let's be patient. Another sell video that price you're going to take is this one. Yeah, let's print money. That's great. That's good. Who's the big guy? $0.50. I'll go frames. One lot booked 50 cents. Oh, should have opened a bigger lot size if you would have trusted me from here to here, then give me something a little. So yeah, let's do it. Let's see what price is doing. Told you here to here, A plus setup, one starter lot to here. This is $160 if you would open one standard lot. But let's wait and see. Okay, stop loss of last one moved to above the week of the last candle. Yeah, just that was, yeah, it's great. So see that position, she'll give me $1,000 account, then we flip it to 2 million within 2 months. Markets are hard to predict. Who said that? Not in mine. See, what if you would have opened with a 0.1 or a 0.2? But don't worry, we're gonna print money. We're gonna print money. So you see that position. If I would be an aggressive scalper, I would have taken this price will actually go to this sell side liquidity. See this, and also our price did that market structure shift, came to this market structure shift, came to the fair value gap to here. Those are quick entries and exit. But what you're targeting is that sell side liquidity. And let's watch what price is going to do. And I think that price is going to go to our direction. It's coming to another fair value gap so that it can rally down. So yeah, next A plus setup. You'll actually look for one. If you'll get one in the New York session. Did you know that tomorrow is the USD bank holiday? Yes, you're right. You are right. This will give us $1 straight. Yeah, but it usually depends with the confidence. But I was so confident. This is the reason why I had put that sign. This one. See, when I put this one, I'm actually confident. So let's see what price will continue doing, and we want to anticipate price will go to this sell side liquidity. Let me tell you, these sell side liquidity, you're remaining with only 2 hours to the London close, to the London session close. So I think another entry here to here, that's actually a good idea. But let's see what price will continue doing. But what I'm expecting is this sell side liquidity taken out, and we're gonna just sit here and watch. After it has done it, yeah, this will have given us $150 straight. Yeah. And I've seen the entry was this is the midnight opening price, this blue line. See that blue line? Let's check in the 5 minute. Inside that fair value gap. It was inside the fair value gap. So told you fair value gap in the 5 minute. As according to our trading plan. Just analyze the trading plan. Told you. Okay, we haven't sold above the opening price. This according to the after the market structure shift. But the best was here. Let me show you. You see this black line, this dotted black line, this was the best entry because buying, sell stop and buy stops. These are buy stops. Buying above here, we are above the bidding price. So Yeah, and watch and see if price will actually come to this sell side liquidity, and it will. You see this internal range and exit to external range, holding for more pips. How do I know? There's another question. How do I know how many pips I should hold? Just analyze it in my trading plan. Any enter now? See how that is also nicely in the 4-hour. Inside that 4-hour fair value gap, you see nicely. So looking for lower prices to this sell side liquidity. So you're operating out the buy side liquidity, then what you're expecting to go lower. And also price, this is a fair value gap here. Do you see it? But we want to see price disrespecting it. That's another fair value gap. Yeah, that's usually my confirmation. Usually this is the best entry around here. But the confirmation, let me tell you, market structure shift in the 1 minute. You have the price bought this buy side liquidity here. Like price took out this buy side liquidity with a market structure shift. This is the 1 minute market structure shift. Let me tell you why I marked the green line. I put green in the 5 minute market structure. See this? The price taking out this buy side liquidity, a market structure shift with a fair value gap. Let me explain. Fair value gap, then putting a stop here. You would have been taken out, but I used this one. This was what? It was a 5 minute market structure shift. Price did what? Did the 5 minute market structure shift, sold. After market structure shift in the 5 minute, price rallied up higher. In the 5 minute, if you transpose this one, you saw it was a 5 minute fair value gap. At the same time, this an order block, this an order block in the 1 minute. So price can actually come and don't close inside it. Boom, decline. Now let's watch this price action and see if price will actually go to those sell side liquidity. Yes, we could have sold above the blue, yeah. And the market structure shift confirmation should be in the 5 minute for an A plus setup. Yeah, so tell dear, see that fair value gap that I've marked in the 1 minute, take note of it. Till decline, make prices to decline lower to this area. Trading is easy when you have a trading plan, and I've actually shown that trading plan. So easy. Yeah, 5 minutes is usually the confirmation. Let's check a fair value gap in the 5 minute for a re-entry. I use the one in the 1 minute. Yeah, though we'll just be live in those old sessions. See that entry into that 5-minute fair value gap? Nicely. We will be live in all those sessions. Let me put that specific fair value gap in bold and see how price will react to in the 15-minute wrapping. But you see how price took out that sell liquidity. Those are, if you're scalping, those are the, if you're sure that you are seeing these sell liquidity, this 1, 2, 3 here, those are entries that are entering with one lot or a half a lot here, or half of a standard, another 0.5, exiting here, full exit if I would be doing a super scalp. But since we are intraday trading, removing half of the trade here and leaving a runner and putting a stop loss here and not wanting to see a stop loss being taken out. Let's continue watching that price there, and we'll see price taking out the sales liquidity, these ones. That's what I'm anticipating. Yeah. Two standard lots. Yeah, I'll actually guide you, don't worry, but two standard lots. Two standard lots. Thank you so much. Yeah, you know, if you know what price is actually doing, you'll actually have more confidence. Thank you so much. And it's actually great. If you trade two standard lots in an A+ setup, that's actually good. But the two standard lots, take note that you will not want to do those 30 pip scalp, because you wanna be a millionaire overnight. If you did two standard lots with a 30 pip range, but those using high leverage, using high lot size like standard lots, okay, it's a good one. Actually, encourage that. But those are entries that you'll want to enter here, exit here when price take out. You see in the 1 minute there and there. Not hold it for so much with this consolidation. See your price actually behaving here. How many pips are these? Because you know you might be here and prices. Yes, that's actually that's great. 10 pips. 10 pips is easy to get. We will do that. Yeah, my share. I've been waiting for that. I've been waiting for that for the longest time. So waiting for it, but very waiting for it. See this 17 pips for mind. 17 pips, and we're not yet done with our session. I'm anticipating 30 or 40 pips, but we are going to take out something at 5 for price reaching 30 pips. But these 17 pips, imagine the standard lot, $200. Yeah, we can do that. That's actually, it's obvious. Yeah. So, wow, that's a bit, 50 pips to, my target is 50 pips, but when price reaches 30 pips, getting out something a little, let's watch it. Yeah, we're gonna make money. See that position, you're gonna make money. Remember when you said that price didn't trace into this fair value gap, but I entered even if price did come to the fair value gap. Actually knew that the next thing after that market structure shift, you'll want to see a fair value gap in the lower time frames, like in the 5-3 minute time frame. You see, price didn't, when we were talking, price came rallied to inside that fair value gap. Then want to see more decline. The same thing, you see this a 5 minute fair value gap, price comes into this fair value gap, then you will want to see more prices continue lower. These are sell side liquidity that you want to see price taking out. I have ever seen something like this. Internal range to external range, 50 pips. That is why I'm saying give this kind of. Here's what I'm saying. It is literally yeah, 10 pips. Yeah, it's easy. Yeah, that's good. That's good. Yeah, I'll actually do that. The same that I've actually done here. And what I'm expecting is prices to continue lower. We're actually remaining with 1 hour 30 minutes to close, but we'll want to wait for 5 and see what price will do. It will continue lower. Yeah. Okay. Yeah, that's so nice to hear. See when you're here. Yeah, it's just a cakewalk. It's so easy. You know, when you know what price is doing and you've seen me breaking down to the early 4 hour, you're inside a 4 hour fair value gap, a 1 hour buy side liquidity has been taken out, a market structure in the 5 minutes, and we are inside the correct time. You see, just came the correct time. Then see this one. So our next target will be this one. After price leaves this area, next target is this one, then the final one is this one. But let's watch price coming to here so nicely. So easy. Checking the euro is declining, but not that much. That okay, it's declining. DXY should be rallying up. Nice. It is moving to the previous day low. It is moving to the previous day low. I've actually marked it. That area that I've marked, you see this on Thursday, Wednesday. What I've marked here, previous day low. You're actually right. Actually trying to catch this concept. I love that, algo friends. I love that. So let's see what price does. Seeing these prices come to this fair value gap, a sure bet thing, selling here, taking out something here. A sure bet, guarantee all your money back. He actually thinks that ICT was, what I'm saying is that ICT was saying that when he was feeling price will go there, guarantee or money back. So calling price is actually something, let's say it's my hobby, let's say that. So this is the next target. When I was marking that fair value gap there to there, let's watch it smoothly. Crazy, right? I've actually analyzed the trading plan to the economic calendar. It's so easy, so easy, so easy, so easy, so easy. Next target. You want to see price rallying up to that fair value gap or not? That's a fair value gap. Price can, if it's gonna rally up to that fair value gap, then decline lower. But guess what? From our entry, 20 pips. So yeah, the price has given us 20 pips. It's not enough, but let's see what price is going to do. Yeah, it's gonna take that previous day low. Let me just do some tasing here. Or money back. What do I mean with that? Price will go there. If it doesn't, giving you your money back. So another, I'm not teasing you to do a sell, but I'm telling you I want to see price there. Is it 10 pips? Once it is a little higher, we'll sell there. You should be selling to this area, targeting here, where I'll tell here our money back. That's actually liquidity that price will go, so there's nothing to fear. Wow, I saw this session was short. Or is it the way that you're calling the prices up and down, and we're seeing that precision, so making prices to go lower, like it's the session is so long. Yeah, you want to see a retracement if you are saying that, but here the stop loss, you don't want to see price coming back to this area. The candle at 3:15 in the 5-minute time frame, if you're really going to go up, I'll not want to see price coming to this. If it comes now, we are actually in a wrong area. Now check. Remaining with 26 seconds, 25, 24, 23, 20. It's creating a fair value gap in the 5-minute again. Stop loss will be here above here, so price will come rally to inside this fair value gap. You see that fair value gap in the 1 minute also. This it's not been traced back into, so price closes. Yeah, it has closed. Now we want to see price rallying up inside that fair value gap in the 5-minute. Comes out in the fair value of the 5-minute, or doesn't, but what we're expecting is this, the sell side liquidity. Price can come to that buy side liquidity, come. I think that will be late because this was the best entry here, another entry then we're expecting here. it might take you but selling and putting a stop loss here in an area that will not incur a lot of significant, okay, these are loss, but there's a significant loss of your account here. But also price will not disrespect that order block. But let's see here. See how it's doing. So smooth. Yeah, that's a rule, but the best entry, okay, that's a rule, yes, but you see this in the 315 when price came to that fair value gap, that was the best entry. This price can disrespect that one, but you see this is the best entry. Seeing that we are looking at price currently here, that doesn't mean that you will want to see a fair value gap here. This, you see, if price has already entered into a fair value gap here, this is the next target. It's not a must that you wait for any fair value gap, but if you have seen price has come into a fair value gap in the 5 minute, in this higher time frame here, yeah, this secondary was the best. So this area was the best to enter if price was consolidating there. Then yeah, here money back. So price can fail to enter into this fair value gap, yet in the upper section it had already entered. So anyway, you should have bought in this you should have sold, not bought, in this consolidation here. So there is no issue, but yeah, 1 hour 27 minutes for the London close. Our rules are at 30 pips. How we should have sold it. So precise. Actually, we're here in live, calling the markets live. Guarantee or money back. What's this? Our trading plan. Something has been hit in our trading plan. First target at 30 pips. See this one? First target at 30 pips. Let's measure it. 30 pips. It looks like poetry, yeah. Calling the markets so easily. The entry was there. That fair value gap. Remember. 30 pips. Is there anybody saying trading is hard? Because I ain't seeing anything hard here. First target at 30 pips, you're gonna take something out. Trading. In order to reach this level, you'll have sweat. Woo-hoo. Yeah, it looks like poetry. Just smooth, precise, analyzing the market in the 1 minute time frame, and market is doing what we are saying. So yeah, so precise. Checking the 5 minute, because you can see no price actually good, that sell side liquidity in the hourly. So what price will do, actually go to this sell side liquidity. If you're targeting 30 pips and price is at 27 or 27 or 26 pips, how greedy are you that you do not take price out? You see, so actually giving you more chances. But price will reach 30 pips, let it hit that area, then our first target will be hit. So smooth. And I also told you the reason of price declining, this sell off. I told you earlier in Tuesday. Okay, didn't say that FOMC are gonna sell. I didn't give a directional bias of the FOMC. But what I tell you, smart money was inside there. Remember, I was marking this SMT price, not it's making higher lows, same to here, and the DXY it was making some lower lows, I think. So that was an SMT. Telling you, smart money is inside this move, and yeah, so precise. It's actually those best trading days, and also on, I think, Wednesday London session, or on Tuesday, I told you after this FOMC we are actually going to get money. Oh, it's actually so sorry for that. So So sorry for that. Okay, you see how price is actually going to that fair value gap. See that this is another block, so I want to say price in that other block. That's another block. Okay, I've marked all the wick, the body, because the wick is so small, the body is so small, so I'll just choose all of it. So let's see if price will disrespect, it will respect that other block. Then we continue to this here. It's actually 5 here, so these are 50 pip range. Okay, not that one. Yeah, this one is a 54 pip range, so we can't just hold for a session for 54 pips. We'll actually want to be taking out something small in those smaller time frames. Has there been a liquidity sweep? Okay, this is an hourly order block here. So these are really that we want to take partials or take out something more than half of your trade, because we are almost in that 30 pip move. So at that area, this is an order block. You see this, the last down close candle, price can actually be respecting that. And yeah, our price is coming to this fair value gap. So I'm still not changing my bias at this point. Nah. I think this is to fool people who wants to buy, who are so in that want to buy. But if I see a market structure shift in the 5 minute, oh, it's so far. There is no signs of market. It's only here. So I don't want to see this price coming in. If it touches this order block now, we'll know that we will be out of this session, and we have yes, the area should have a yeah. So hope this area you can just hold to wait price to come and take you out all here. These are the area. Okay, this is the sure bet sell side liquidity, and this one, you see these, like, will be that aggressive scalper and knowing what price is doing, calling it in the 1 minute time frame. After that, market structure in the 5 minute, buying here, selling out here. It's 17 pips, around it's 20 pips, and yeah, see that reversal. Those are signs that we were actually wrong. That aggressive buy there. Here, there are signs that you are wrong. Let's check in the 15 minute. I usually hit that sign. Oh, in the 15 minute, it's actually retracing back to a fair value gap. See that? Scaring us. So let's watch it here. Yeah, it has disrespected it. I usually don't love price closing outside the fair value gap. Yeah, but the analysis was great. We're actually remaining with 1 hour, 20 minutes to our session close. We have already gotten up something, and yeah, but we are waiting for 5 a.m. to close our full take profit or at a forward discount array. See this, from this fair value gap, I want to see prices. Yeah, I want to see price coming to this previous daily. Let's watch it. I still don't trust that rally up. You see this rally up here? Yeah, you see that fair value gap price has come inside that fair value gap here. Let's do it with that sell side liquidity. There are levels that you will have taken out your partials, same to these ones. That order block. See that? Price has come into that order block. Has there been a sell side liquidity taken out in the 15-minute time frame? There is no. So price can be coming to this fair value gap, then now decline lower to the 5M. But let's watch it. The 3-minute. The only thing that will convince me that I'm wrong, you see now the importance of taking partials. This reversal would have us targeting this here. Let me remove this one. Us targeting this sell side liquidity, holding for those great profits, seeing them, then this reversal. What a great idea. So see the euro is rallying. So anybody was the DXY is declining rapidly. This one is actually started to rally up. So those are the importance of taking partials. You see that reversal. Yeah. If it's going to reverse fully, no problem. But let's watch and see. But I'm still not convinced that price will actually come to this area of ours. So if it reverses completely, we have no problem. We have made money, got out something. Price is reversing. So we're gonna end the live in the next 30 minutes. So yeah, you see also price has come to that fair value gap in the 15-minute time frame. So a market structure shift in the 15-minute time frame. You see this? Let me show you. a market structure shift in the 15-minute time frame. You see this into a fair value gap. I'm not saying you enter now, but it's so late. Now let's see that decline for anybody who got that up. But if I was managing a trade, I would be taking partials at these levels. You see these levels here to here, great level that you can take out something. But let's see if price will come to the sell side liquidity again, because I'm not yet convinced that price is actually going to. The chart is so dirty, so let's clean it up. Deleting everything. Yep. So yeah, 5-minute market structure shift. So yeah, it seems it can be doing that. So let's see, let me show you what's happening. Anytime a significant price move lower is expected, always anticipate a measure of buy stops being taken out. This is it. So we're anticipating for price to come to the sell side liquidity, and we got that move in the first 2 hours of the session. Buy side liquidity taken out. I want to analyze from the 5-15 minutes. This is a market structure shift. This is a market structure shift, but it was exit levels and those lower time frames that you are entering. You see, market structure shift, creating a fair value gap here. You see that fair value gap in the 15-minute time frame, the same fair value gap in the 15-minute time frame. In the 5-minute, this is not a market structure shift. Seems market structure like in the 5 minutes. A market structure shift is only validated after a sweep, and I'm not seeing this. This is not a sweep. Cannot be still with that. This price has not reached here. So market structure shift is only validated by after. If you can see my trading plan, let me show you something so crucial here about this issue of market structure. You see here in the market structure shift, after a liquidity sweep and a market structure shift, I would have written after a liquidity sweep then a market structure shift, but it's still the same. But you want to wait for a liquidity sweep so that to be validated as a market structure shift. Sometimes it doesn't, but the A+ ones are those ones that I'm telling you. Actually, my stomach is crumbling. I haven't eaten something since morning. So yeah. So this, it looks like a market structure shift, but I wanted to see something like a stop run. So that we can enter buy. But as for now, it's still bearish. You might want to see, this might be anytime a significant price move low is expected, this buy stop has been taken out. At the same time, it's a 15-minute fair value gap, so price touching it and declining lower to our intended area. But you see moves like this, it's creating if it creates a swing low here, when price goes back to this level, you want to take out something if you are caught up in that rally up higher. But stop loss was here. This was the original entry, so that if price comes here, you'll want to be taking out something and leaving a runner to here. Still not convinced, but yeah, you see that price coming to that fair value gap. I want to see price disrespecting that fair value gap. That's what I'm anticipating. And see your price is closed inside. pin bar in the 15-minute time frame. Is this the pin bar? Kindly, can you confirm this? Is this the pin bar or is this a hammer? Is this the pin bar you're saying? I think it is, because I'm not really familiar with those kind of words, but I studied and did candlestick patterns and the doji, 3 army, yeah. But what I was telling you, trust me, I've done this for a long time, yeah. See that level that I marked price actually come and touched it. Yes, hammer, yes, this one. Totally, I know it. I know everything, some of it. So see that level gap, price want to take out something a little bit there, but I want to see price coming to that area. This is not a market structure shift. I am not anticipating that to be a market structure shift. Yeah, there is. Yeah, I'm seeing it, but we're going to stick with the order flow. Check here. Now the order flow is taking out that buy side liquidity. I don't want to see price coming above this area before it take out this sell side liquidity here. So I want to see price disrespecting that fair value gap, and 1 hour. This time is so much. It's like it's rallying so much. Imagine we are here for like 2 hours. Wow, and it it looks like minutes to me. So so it's only me with my best student only in this live. We are not many, but what did I give? Valuable insights. If you are here, you had money, so can't deny it. And also tried to share. So body might enter the fair value gap, or body cannot enter. Yes, what do you mean? In what time frame? Are you saying in the 5 minute? Or what? I'm not. In what time frame? Yeah, you see that price, the 15-minute time frame, come and turn that fair value gap. So taking out something is reasonable, but we wanna see price going to these sell side liquidity. You see, told you should trust the pilot. So this is also a tricky area. You'll want to see the body, the 5 minute, 15 minute. So what I wanted to see, if price had entered here, and if price had entered into this fair value gap and seen a rejection higher, that one would have validated this market structure shift, because a market structure shift with an entry into a fair value gap. But this fair value gap, since it had disrespected it, I'm seeing these ones here. I want to see this continuation lower here. See this? See, price came and touched that fair value gap, then declined lower. A fair value gap in the 15-minute time frame with an exit in the fair value gap in the 5 minutes. So that's also an entry. But the bigger the range, yeah, the bigger the money you can make. So you see, prices don't go in one direction. Like if you're selling, we sell, we sell, we sell. No, up and down, up, consolidate, decline. You see, declines, consolidate, declines, consolidate, declines, reverses, then continue. So the price don't go in a straight line. Actually remaining with some few minutes, like 30 minutes to, but we might take it until 5 if price does what we want. I've seen anybody who was scared for that rally up and closed profit. See this? So that's the reason of confidence. Yeah, I said that I wanted to see price not coming to that top level, to this order block. Yeah, price disrespected it, but when we were in the 50-minute time frame, we saw that was a fair value gap. So comes that fair value gap, then declines low. So there was a sell-side liquidity. I want to see price taking it out. Maybe taking my first partial there of price take, or my second, when price takes out that sell-side liquidity that I've marked there, for anybody who was scared for that price rally up higher. But how price was entered that 15-minute fair value gap here, I want to see price declining to those sell side, probably to these ones also. Don't forget to like the live, it's actually insightful. So see the pilot calling the markets just as it is. Sell side liquidity being taken out. Disrespected that fair value gap. Now what's the net target? These ones here. Remember when price was rallying up here, I wasn't afraid of we are actually wrong or something. Nah, just cool and relaxed. So I want to see that price doing that. I've actually managed the trade from the beginning to the end. My oh my. Sell side liquidity, obvious ones. Now, according to your view, anybody's view, if you're viewing this video 10 years from now, 20 years from now, 5 years, 1 year, imagine if I would have 100k. That's very big goal. $100,000, either prop or real. It would have been so ridiculous amount of money that would have been printing every day. Yeah, getting but in 1,000 USD is required to get into. Okay, I will be managing. Yeah, it will be nice, but in real account, let me just tell you one thing. Selling here, getting out here, opening 5 standard lots in a real account, that would have been even 2%, 3%, like, so a lot of money. So let's continue to what we were saying. 30 pips, take 1,000, 22,000. That will be crazy. But that one, printing millions, I guarantee won't take even a month. I guarantee with a good internet, good place, that will be a good one. Can I tease you? Can you try? Let's try that one. Or let's try 500. So as we were saying, the sell side liquidity price has reached 30 pips, just as we were saying. Let me put that marker there. You see that reversal can actually, if you don't know what you're doing, this can actually cheat you that we are going up. But if you align yourself with the order flow, See, precise 15 minutes, price came to exactly the peep to this fair value gap, then decline. This can only be an entry. Fair value gap, exit here to this. Our entry was here. Let me put that sell. Yeah, like this one was an NA plus setup. I told you from Monday. I told you that Thursday we're gonna have something, and there is it. And I marked these sales liquidity even before price reached them. Remember? Told you. So price has reached 30 pips. I believe that. Yeah, it has started 30 pips. So that's an area that you'll want to take out something. 30 pips. According to our trade plan. Meaning that we have mastery. Our first target reached. Done. We can close the live. We can wait and leave a runner for 5 a.m. But we're gonna leave a runner. That's our area that we'll want to take out something. So that level, 30 pips done. You'll want to take out something out. So crazy. Did you hear that sound? That's the sound of closing an entry. So 30 pips has already been the target done. 30 pips. It's my trading plan, and I've told you we're gonna use it for the next 20 years or 10 for GBP/USD. But in the next 2 or 3 months, I'll be building another trading plan for trading E-mini S&P and Nasdaq. Did you know what I've already done with the trade? Because it has reached 30 pips. That's my target. So I don't need to enter another trade exactly at 30 pips. Then you see price reversing. How precise. And it was in my trading plan. You see that trading plan of mine? This first target at 30 pips or at 5 a.m. It's only 47 minutes to 5 a.m. And yo, so an entry just wiggled in the few minutes, got it before it actually happened, got it. We're done. I don't want to see what the market's going to do until New York session. That's when I want to look for the markets again, and that's the when I'm going to open my charts again at 6:50, waiting for the London. Now I'm going to close the live. 30 pips from my entry algo frames. Check this one. This area. Remember when you told me that price had not come into that fair value gap in the 1 minute, so no entry, but I already entered. The same time price rallied up higher to this 5 minute fair value gap at this moment. At this moment, 30 pips. What level is this here? 33,160. That area, and 33,160, 30 pips. You see 30 pips, and it will continue lower to this sell side liquidity. You see when I told you here, guarantee your money back, this is the level that I was saying, guarantee your money back, this sell side liquidity. But since price at 30 pips, I'm not interested in entering again. Oh, I am so sorry. I'm so sorry, I actually didn't change the charts. Thank you for telling me. So this is the area I was saying. I actually marked this area. See this fair value gap here at 30 pips. Price came to this fair value gap at that level, marked it to this low, 30 pips, and price actually continuing lower to that sell side liquidity, and it's actually continuing lower and lower. So our first target at 30 pips, another target price will reach to this level. It actually come during the New York session and see what price has done. So this is, let me mark it there, 30 pips, and let's extend it to the, so this actually, we got the high of the day. Let's see if price will continue lower to that sell side liquidity. I will actually come during the New York session and see what price has done, but price will reach our target 30 pips, taking out something. I'll actually leave a runner for the New York. We'll actually come during the New York session and see what price did during the New York session. But this is our target. This is our full target for today. We're gonna work with that for today. So don't forget to like, share, comment. If you found this insightful, calling the market, calling it from the 1 minute, analyzing from the weekly to the 1 minute, who does that? And you have seen this prayer going to continue. But you're not interested. You're seeing it declining lower and lower. It might go and pass it. See? It's actually continuing. So first target at 30 pips, the other target at 5 a.m. Let me write here what I wrote earlier. It was a text. No, what's this? Guarantee. Price has just done it, so no need of just teasing it. Price has gone to that sell side liquidity. You see it has taken out that sell side liquidity. So perfect. So if I had 100k real money selling here, taking out something there at 30 pips or at 5, actually be a great thing. See how price actually declining. So it's actually accurate, and there is nothing I can just say. But today we have followed our trading plan. I actually come live. I'm not going usually to, that's the first and last time me presenting my trading plan online. And for the rest of the days I'll be actually coming up because I have the physical one, so just viewing the market. So perfect. My trading plan just worked perfectly. We executed perfectly, and if I stay here for long I'll talk for the whole day. But let's just stay cool. We have called the markets. Currently the markets are 35 or 30 what pips. 36 pips as done, 36, okay, that's 5. So that's a level. Our first target 30 pips done at 5 a.m. taking out something, and we'll want to see during the New York. I'll actually come with this same chart. I'll actually close the charts and open it again during the New York session, just as the way I'd have leaved it like this. But this is the level that, let me delete this one and make it clear. It's actually a 60 pip run move, I think. So yeah, price continue to decline lower and lower. At exactly 7 we're hunting an FOMC, the minute rate announcement in the USD. Yeah, Euro New Zealand, let's review it. That's actually good. Euro New Zealand, so perfect. Oh, they were rolling up. See see this sell side liquidity. You wanted to see price. You are actually wrong in this analysis, saying that price is actually going to the sell side, but therefore it's not a big move. Let's start from the weekly. Let's delete everything also. Sell side liquidity taken out, and see price rallying up higher. Okay, here in the daily, before we are inside that fair value gap. Also here, this is a fair value gap in the 4 hour. This is an order block, but it's consolidating in that area. We have no clear direction. That fair value gap had been disrespected. I told you, when you are analyzing the Euro New Zealand, you'll want to check the USD, NZD USD, and the Euro USD. But the Euro USD, you're seeing, you're expecting lower prices. Is this a stop run? No, it is not. Let's check the NZD USD. What's happening in the NZD USD? Declining lower. The actual analysis that we're doing roughly. NZD USD. NZD is declining lower, and the dollar is rallying up higher, so NZD is gonna be weak. NZD USD, so meaning that we have a weak, NZD. What are we analyzing? Euro NZD. So Euro NZD, Euro is the stronger one compared to NZD. So NZD is weaker. So we're expecting bullish prices in the Euro NZD. Because this is an order block, this is an inversion fair value gap, to and through it, and also taking out that sell side liquidity. I'll actually teach about that. So what I'm expecting, it has taken out a sell side liquidity in the daily. Sweep that one, and also this order block. We want to see prices rallying to this buy side liquidity. My analysis in this NZD USD, I'm expecting bullish prices, but NZD USD, Euro NZD, in the 15 minutes is a fair value gap. But this fair value gap has already been traded here, so it's actually a tricky situation. But you see, now this will be a consolidation because the euro, it's actually closing hours in the euro, like the morning session, and the NZD, they're actually closed. So you'll want to see consolidation. Let me show you what I mean. You see this pattern here around 4-5 consolidation, but it moves during this you see this time that it's moving from 2, it actually has its moving time, so during that time that you'll want to. So what I'm expecting, in short, it's bullish prices to this buy side liquidity, because this is an order block. You see how price is making this order block, not closing it below it, inside it. Order block, price comes, order block, order block, order block. So I don't see price coming to this buy side. Let's see during the New York session in the euro and the D. I'll actually remember if price will come back to this buy side liquidity. What's your analysis in the euro New Zealand? I'm expecting bullish prices because the NZD is weaker, and the NZD JPY, NZD JPY, JPY, NZD JPY. JPY. You see, NZD, I told you NZD is weaker, so meaning that we're going to continue lower too. NZD JPY is going to decline lower. So NZD is generally weaker. NZD is generally weaker, so that's my bias. Sell side liquidity. I'm expecting lower prices because I've analyzed what the NZD is. So New Zealand dollar is weaker, but the other block should be the last low red candle, and red was inside the green. That's the euro New Zealand, if I believe. Euro. I'm just telling you the order flow. The order flow is you see that that's what I'm meaning, like price order block. You see, after this close, it's 230. After the price closes above it, now that comes an order block. When price comes below it, even in the next 2 candles, it will be another block. You see, your price comes it and touches it and goes up higher. Same to this one. See how price is not closing inside it. I'm expecting prices to go rally up higher. But it's so tricky in the euro New Zealand because the euro we're expecting lower prices, so it will be a consolidation. But what I'm expecting is continuation higher. See that price comes at 245, comes touches it and rallies up higher. This is the same here. Price not closing inside it, and I want to see prices under. If it goes lower, we will probably want to align ourselves with the time that New Zealanders actually are opened also. But I think they're closed now. I think it's night. I don't know, but I'll check on that. I also want to check on the euro New Zealand, the currency. But you see your price actually rallying up higher. Yeah, the NZD JPY, I've told you that you're expecting a lower price because the NZD is weaker. That is just declining lower. But yeah, coming back to the New York, and we'll see if price will actually go. Are you satisfied? And to close the live, are you satisfied, or can we go the NZD JPY, NZD JPY? Next time when I tell you to buy, you buy a good lot so that we can have a good profit split. I wish if we'll make money on this week. You do your thing, man. They keep on moving, even Europe, and that's okay. Okay, yeah, but they'll they will actually continue lower if they keep moving during that time. It's actually fine, but I'll do more analysis. I think I had notes I still doing it. his what? Mastering high probability setups, or the Forex Primer. Yeah, the Forex Primer course, he actually said that in the Forex Primer course, he said that these cross currencies, there are times that they are freed up, like they move. There are the specific times. Hope you're satisfied. Checking the currency there, it's actually declining smoothly. According to our trading plan, I presented my trading plan here, and you've seen how price is actually doing it nicely, accurately. Give it a like. It's actually going down there. So on your side, prepare good capital so that we can print money with this kind of knowledge. And this is the 1 minute time frame. Remember, it's not those bigger time frame that you wait. And I've come exactly to when price was wanting to move. So hope you found this insightful, hope you found this helpful, and I'm going to close the live and wait for New York session. But what we're expecting is price. Actually, price has gone over 40 pips. Yeah, this is the area. Yeah, it's actually touching 40 pips. Okay, no problem. Let me end the live. We'll connect. Don't forget to like, subscribe, and share. Adios, muchachos. Call me Algo Frames so that we can have that interactive chat.